When a currency or any asset class can move 10% or more in a day, the challenge is to slow down that market and find a way to trade it with a defined stop. So what may seem like random moves will make sense to you. We do that, and we've accomplished this using the Amazing Trader. And we're going to use Bitcoin as an illustration from October 5th, 2021. Our first step is to decide what side we want to trade from. And the way we do that is we start with longer term charts. We work down until we find a bias. We decide what side we want to trade from, and then we look for an AT ladder pattern that allows us to come in and trade with a risk that's defined and one that fits our risk profile that we're comfortable with. Now, if you look at this Bitcoin daily chart, move up it ended, coming down. You can see these two red lines. We call that our directional indicator. It's all explained in the AT study guide and why this was a potential bottom and worth a long with a stop below this red line over here. And you can see what's happened. But for today, you look at a daily chart, this line is too far away, so we can't place a reasonable stop. But we know the risk in this case had shifted to the upside. So we're looking from a daily perspective for levels to go long. On a 4-hour chart, similarly, these two lines over here would have indicated the risk had shifted to the upside. And while we might have bought in this area here, for today, this line is still too far away for us to consider a long. But with red lines dominating and blue lines being broken, it tells us what we saw in the daily chart, that the risk is on the upside. Now we look at a 1-hour chart. If we were trading yesterday, we might have had an opportunity in here to buy. These two red lines here. Again, red lines dominating. But for today, this red line is too far away. There's two red. Each one of these lines, by the way, is an Amazing Trader line. It's too far away for a stop, but we know the risk had shifted to the upside. So we go now drill down to a 30-minute chart. In a 30-minute chart, we have multiple red lines. And this was only 3 hours ago, 4 hours ago. There are plenty of opportunities to go long here. And the way you go long is you buy with a stop below the most recent Amazing Trader line. This line being the most important one probably for the day. But if you bought anywhere in here, even in here, with a stop below the most recent red Amazing Trader line, you could have taken advantage of this move to the upside. This is all explained in clear detail and how to execute trades using it in our study guide. And if we drill down further to a 15-minute chart, we even had more red lines here, again dominating, that would have allowed us, this is an AT ladder pattern, again, similar to the 30-minute chart, and we bought anywhere along this pathway with a stop below the most recent red Amazing Trader line, you would have been in with a long, your stop would have stayed intact, and you could have taken advantage of this move to the upside. So just to summarize, we use the longer term charts to help define our bias. For today, there were no reasonable stops there, so we kept drilling down until we found a 30-minute chart or a 15-minute chart. In each case, it would have allowed us to go trade from the long side with a defined stop in a market like Bitcoin, where otherwise there's often no place to put a stop, and take advantage of this move to the upside. That kind of summarizes it quickly, how we use the Amazing Trader. We drill down until we find a place where we can enter a trade along the general bias, which in this case is to the upside.